Joining us now is ShawnStockigt. He's the small caps fund manager at Stanlib. Shawn, thanks very much for your time. Let's kick off with CMH, that company out with results yesterday. And we saw headline earnings per share up 212%. Certainly a turnaround on that front and a big rally in the share price yesterday. We were up over 4% at the close. We know that it has run relatively hard to this point. Is there, in your opinion, further upside?
Well, I think, you rightly say the market was expecting a strong number. I mean, it's off a very, very low base. And if you move further up the income statement, obviously revenue is still under a little bit of pressure. So it's just showing that the market is still a little bit tough out there. But, on a multiple of around about 14 times, it's probably pricing in much of the upside. And if you look at the current earnings, that takes it back to about 2005 level. And I don't think we're going to get those peak car sales that we had 2006, 2007 in the short run. But definitely a well-quality business and managed to build themselves through this tough environment and still around. So it's a good sign.
Let's refer to the trading update out of Astral and moving into the chicken industry. We are seeing some positive news flow on that front, looking at headline earnings per share rising between 15 and 20%.
I think it's a strong number on the bottom end, and one must probably wait until results come out, because I think a lot of that would have come through cost cutting as well as a drop in the input price. I mean, we've seen the maize price come down quite heavily, and that would obviously have a benefit on the input side. But I think from a chicken sales side, we'll probably still see a little bit of pressure there. The consumer doesn't seem to have come back as strongly. We can see that in prices of chickens just on the shelves. So there's still a little bit of demand pressure from the consumer on the chicken side, but they're probably getting the benefit from the lower maize price at this level.
So from the vehicle industry, the chicken industry, and now into the consumer electrics industry, looking at the likes of BMW, that company was out with results and sales were down 8.3% on that front, with headline earnings per share down 11%. I'm not sure if you can do a straight line comparison with New World, because on that front we saw first half revenue up 18% and headline earnings per share up 102%.
Yes, slightly different businesses. I mean, BMW obviously benefits from gross domestic fixed investment. They're more sort of electrical engineering type businesses. So they would have been benefited from the construction boom. And I think, not a bad set of results, although 11% down, and comparable like for like, but if one looks at the first half to the second half of last year, then it's up 22%. And also they managed to maintain margins, and I think done acquisitions through this period, so the capacity is there. So I think the current valuation of a multiple of about 5 times at the bottom of the cycle earnings, I think this business is looking relatively cheap. New World side, obviously, they have had a strong set of results. I mean, the headline earnings per share up over 100%, and the quality of that headline, although also off a low base, but the quality of that earnings growth we saw in revenue. We saw revenue growing as well, and we also saw margins growing as well. So a strong set of results, and as I said, that the consumer seems to have come back pre-Christmas and then after Christmas as well, mainly on the flat screen TV side, but also a well-run business.
Shawn, always good catching up with you. Thanks very much for joining us. It was ShawnStockigt.